What if it was actually never the 4-year cycle and it was always just liquidity that was timed perfectly with each Bitcoin 4-year cycle halving? This is something I've talked about before, and I've heard about it before, but it's something I definitely want to revisit because I think it changes what we should expect over the next 3 to 6 months. And also, I think it makes sense. So the first thing I want to look at here is, according to prosynthesis.eth on X, macro liquidity cycles just happen to align to every 4 years in the past, roughly 10 to 15 years. Bitcoin has only been around a little bit more than a decade, so it's not like we have 30 or 40 years of data to really show that Bitcoin's 4-year cycles 1,000% are the reason for each cycle. And if they have lined up perfectly with liquidity cycles over just the last few years, the last decade, decade and a half, then it's really easy to maybe get those two mixed up. So bear markets consistently were triggered by macro liquidity turning negative. Just like in early 2020, Bitcoin absolutely started going up once quantitative easing really took effect. So for the first time ever, according to this post, macro liquidity is about to turn positive instead, where historically, if we're looking at the 4-year cycles, this is the time where we should be expecting Bitcoin to really start ending the cycle, finishing off, topping out, and entering another 4 years of dumpy, right? But this really is a big battle, I guess, between will the 4-year cycle win, or will it actually be against, or will macro liquidity actually prevail? Because maybe this is the first real example of these two going head to head and one of them having to be the winner because they're not timed together like usual, like we've seen in the past. So that's pretty big. Macro liquidity is the cause for crypto bull runs. The 4-year bull cycle is not based on anything else. Each cycle is different, and even reputable macro experts admit liquidity is peaking later this cycle. Meaning, again, if we're getting a divergence between when the 4-year cycle for Bitcoin is supposed to end, and it's different than the liquidity, which has been so far up until this point very correlated, and just maybe by coincidence, because it's only been, as I said, about a decade and a half, maybe by coincidence they've lined up, and this time maybe they're not lining up, meaning we'll see which has a stronger effect on Bitcoin and risk on assets in general and their bull markets. So we see so far in quarter 2 of 2026, that will be liquidity peak according to what all evidence is pointing to right now. And it follows a mini cycle pattern with roughly about 2 quarters between mini bull runs. You can see back in quarter 1, 2024, there was cute animal meme coins on Solana. And then towards the end of that year, we had AI meme coins. Currently, right now, we're in this phase where really no altcoins are doing incredibly well. There's no big, gigantic altcoin narrative. Meme coins aren't necessarily doing well. AI coins aren't even necessarily doing well. NFTs are not doing well. In fact, NFTs have been destroyed recently. In fact, I just saw a tweet today, actually. It was a whole thing about like bored apes, the monkey pictures or whatever. And this guy, I think he bought one for a little over $400,000 a couple years ago. And then he had some sort of call to awakening, and he realized I should just sell this. So he bought it for a little over 400K and just sold it the other day for like $30,000 because he wants to be out of it. Right, so people are losing faith. There's no very clear narrative because there have been, right? It's monkey coins, it's meme coins, it's AI coins, it's whatever. Right now, not really much. But then according to this post, he's saying early, maybe, March, April, May, June of 2026 will be the final blow off top. That lines up more with liquidity. And also that lines up more specifically with, if you compare just the price action and the run-ups of this current bull market to previous ones, as I'm sure you know, and you can tell, we have not had a very explosive bull market. Bitcoin has done really well, could be doing better. Altcoins have done awfully. But again, that's one of the big reasons why this Total 2 chart and especially this Ethereum chart are so exciting, because they look like they're about to go up. And that's really, I think, something that we should be expecting before we really expect this market to tank or enter a longer bear market. According to Adam Livingston on X, turns out Bitcoin does not follow vibes. It follows liquidity. When the printer goes, Bitcoin goes, with about a 3 to 6 month lag. And he talks about some data citing the M2, VARs, Granger, co-integration, blah, blah, all this stuff. But what he's saying is his findings are that Bitcoin is macro's high beta liquidity sponge. In 2020 specifically, this is something he says further in the thread that I think is interesting. The 2020 quantitative easing period provides a perfect case study in how liquidity transmission works. M2 growth exploded about 20% year over year, which is unprecedented up until then. And Bitcoin crashed in 2020 during the global deleveraging, but then completely exploded afterwards with about a 3 to 6 month lag as liquidity found its way into risk assets. What it means, he's saying here that Bitcoin's gains completely dwarfed actual increase in money supply, showcasing its role as high beta liquidity amplifier rather than a simple inflation hedge. And are we about to see something like that again? Are we about to see Bitcoin completely dwarf the actual increase in money supply, which we are currently seeing? We are seeing an increase in money supply, right? Bitcoin cycle peaks in this chart, liquidity adjusted macro cycle peaks, monthly RSI peaks, all tell a story that is not finished yet, basically indicating that we are about to see Bitcoin follow this trend we've seen in the past of Bitcoin exploding because of this macro liquidity, because of the macro liquidity cycle, not just the 4-year halving cycle, which again, as I've said a couple of times, has so far been very correlated and very tied, maybe even coincidentally, to the Bitcoin cycles or macro liquidity. As well, we do see there's about $10 billion in Bitcoin short positions that will get liquidated, about $117,000 per Bitcoin. If we go onto a chart, you can see that's right about here on a chart. So it is right above the 21 and 50-day moving averages, specifically actually right above the 50-day moving average. 50 days right about 115,000. 117 is also very clear, as you can see, very clear resistance. It was, well, now it will be. It was support from the beginning of July to the middle of August. So about a month and a half almost. It was very nice support. We did dip a little bit below it briefly, bounce off the 50 day and then got right back above it. Then when we fell below it, obviously we've entered more of a downtrend. So really, this area right here, Bitcoin comes up here, next time it does, a lot of short positions will get liquidated, push Bitcoin even further, and likely to all-time highs next time we come up there. So Bitcoin's current all-time high is about 125,000 US dollars. Once we get about $7,000, $8,000 below that, so if all-time high is at 125,000, let's say we get up to 117,000, a lot of short positions get triggered there, a lot of short positions get liquidated there. That pushes the Bitcoin price even higher, likely pushing it, in my opinion, back to all-time highs and beyond. Meaning, you don't want to wait for Bitcoin to get back to all-time highs to get bullish. You want to see it come down to come up to this previous support, now likely going to be resistance at about 117. When it gets there, if it breaks above that, triggers all those shorts, squeezes it even higher. There we go. Maybe we're at 130,000 the day after, or within like a very short period after that, because a lot of short positions get completely and absolutely creamed. And as well, it took the US about 220 years to reach $1 trillion in debt. And today we're adding $1 trillion in debt every 5 months. Less than half of a year it takes us to add $1 trillion in debt. In the past, it took 220 years to just add 1 trillion. This is insane. It's unsustainable. Fiat is dying. The US dollar is dying. This chart, this has, you can not know anything about Bitcoin and you can look at this chart and think, holy crap, this isn't good. Like, what's happening? And that honestly should be your reaction, because what the heck? You should be looking for an alternative, and my alternative at least is Bitcoin. We see Bitcoin dominance as well. It's just a matter of about 4 to 6 weeks, and then the floodgates will open and billions will flow into altcoins, which I also fully agree with. Obviously, this chart is something I continue to look at every day, every week. The entire altcoin market chart, so it's just crypto minus Bitcoin, right at about 1.57 trillion. This has been here for a couple of weeks after the initial retest of those all-time highs from back in 2021. Here it is, right? Last time it was in November of 2020. There was a large altcoin rally that people got really excited about because why? Well, that was also the last time we had a rate cut. we're about to get another one. In my opinion, the next rate cut we are likely to get, which is, nothing's guaranteed, but not only is it possible, it's very likely we're about to get a 25 basis point cut. Now there's even debate on maybe we'll get a 50 basis point cut because of the data that came out last week showing that, hey, maybe Jerome Powell and the Fed are actually late to cutting again. Just like they were late to raising rates a couple of years ago, what are the chances they're late to cutting rates? I would say the chances are pretty high. I would say that they are late. I would say that the jobs market is breaking. We have inflation, at least how they measure it, coming down meaningfully. There's no reason right now to have rates remaining high. So if we're getting this 25 basis point cut, which is at this point, the markets are actually saying it's basically 100% guaranteed we're getting a 25 basis point cut in just a couple of days. Let's say we even get a 50. I don't think a 50 is likely, but basically at this point, it's just very likely we're getting a rate cut, which is likely to push finally altcoins above this. It'll be the best catalyst, the perfect catalyst at the potential perfect time as well. Push this above these highs here, right? Get a breakout on the altcoin market, get a breakout on ETH specifically, which is also these are the all-time highs back. I have an alert set for when it crosses 5,000 next because I think it's going to be big, or when it crosses 5,000 US dollars per ETH. This will set off the entire altcoin market like crazy. Obviously, I think Bitcoin will pump as well. This is the chart that I'm most interested to see what happens to, because the Bitcoin dominance chart has been going down the past couple of weeks. Will Bitcoin dominance have a bounce, or will ETH really break out and the altcoin market as well just start exploding? And will Bitcoin stay flat? I think that when we get rate cuts, I don't think Bitcoin's going to go down. I think it could stay flat or go up. But I think of the three options, up, down, or sideways, I think down is the least likely option if, when we're getting these rate cuts. Maybe we'll have, now there's debate again. There was debate a month ago if we will get a rate cut at all in 2025, if we'll get another one. Now there's debates more so of will we, now people are debating, yes, we're going to get one, but will we get multiple before the end of 2025? There's still a couple of months left. We just started the final third of 2025. And there's still an entire fresh quarter left, plus another month, right? So there's plenty of time left. They do not do, well, anyway, point being, there's still time. And if we get multiple rate cuts in 2025, this chart, the entire altcoin market chart, I'm very confident is going to just go parabolic. Risk on assets in general are going to go parabolic. We have right here the entire, the S&P 500. That's going to go insanely high. I mean, it's already like right at all-time highs. It's S&P is known for hitting all-time highs pretty consistently, and it has hit the all-time highs. It's been breaking month after month, week after week for quite a while now. Minus this crazy drop we got in April, which also Bitcoin and everything dropped. But in general, I mean, look at this actually. I think this is a crazy chart. The US dollar right here, I think is, to me, I think the US dollar, because it's already been crashing since the beginning of January when Trump took office, or January 2025. Look at this. I just think the next leg for the US dollar is straight down. And that is bullish for risk on assets. It's very big. So basically, daily chart for Bitcoin I think looks really interesting. We're right on underneath the 21-day right now. Very likely we get a pop above it sometime this coming week. It's holding on the 21-week moving average as well. A pop above here. Again, we don't have to go very high before a lot of shorts get liquidated, as we just mentioned. Just have to go right about to here. Right about to like here on the chart. So it doesn't take much of a pump. From this very second, we would need about a 5% pump for Bitcoin. A 5% pump for Bitcoin is not only easy to achieve, it's incredibly common to achieve even in a single daily candle. We could get to this liquidation for short position level within a single daily candle and be at new all-time highs within 1, 2, maybe less, 1, 2, 3, a weekly candle. It could happen so quickly. And in fact, that's exactly how Bitcoin moves when it starts pumping. So that's extremely bullish, I think. We have liquidity. I think, as I mentioned, and I started off the video talking about, I think this is still the biggest part, is that we have now a true test, maybe the first test ever, where we're not having the crypto liquidity, or sorry, the crypto cycles, the Bitcoin cycle and liquidity of macro liquidity lining up at the same time. So this actually could end a very long debate, because this is a debate I've been hearing about for years as well. It's not like a completely new thing, but I just think now there's more evidence of it now than there has ever been. And it's this is our very first actual opportunity to see and actually have it be tested. So I think that having it be tested is extremely exciting, and we're going to basically know the outcome within the next 3 to 6 months. A lot can happen in the next 3 to 6 months. A lot can happen in 3 to 6 months. And overall, I think we're in for just a crazy ride. If it is not the Bitcoin 4-year cycles that have been pushing things up for the crypto markets, and in fact, it's just macro liquidity. And if we're about to get a big swing, a big change in macro liquidity, maybe this true alt season and even this Bitcoin season hasn't really started yet. So it does give some hope and some validity to the fact that, hey, maybe we're not near a top yet. Because again, there's roughly 30 top indicators for Bitcoin that are very historically important to be looking at, and 0 of those 30 top indicators have fired yet, which makes sense if we're not following a Bitcoin 4-year cycle, but instead a macro liquidity cycle. So maybe leave your thoughts below. Also, I'd love to hear maybe some contrary evidence to this, why you think actually it's not true, and in fact the cycle is ending next month. Or maybe you do agree with it, and give me some more reasons why you think it actually is macro liquidity and not the Bitcoin 4-year cycle that's going to be pushing up this market and risk on assets in general over the next few months. But get signed up with FEMX, BITUNIX, or BYBIT below if you know how Bitcoin, altcoins, or trade. Thought you were feeling good.